Hello and welcome to the Weekly Watch podcast series. I'm Jim McCormick, Global Head of Desk Strategy at NatWest Markets. This series helps you cut through the noise in global financial markets with a quick take on the upcoming trends to watch. As we head into December, this week we're giving you a sneak preview of key 2021 themes from our annual Year Ahead Outlook. In the coming days and weeks, we'll have a range of articles, deeper dive podcasts, and social media on these topics, so please start following us on social media to stay up to date on the expanded content. In terms of themes for 2021, I think there's 6 that are worth mentioning. Firstly, the title of the 2021 Year Ahead Outlook is called Fiscal Forever, Even in Europe. It's an important message. COVID-19 has accelerated a massive paradigm shift for policy. Fiscal policy is now the main lever for boosting growth, and we don't think that's going away anytime soon. If you remember, after 2008, governments made the mistake of tightening fiscal policy way too early. We don't think they're going to make that mistake again. Secondly, the development of viable vaccines is a big turning point in our view for the global business cycle. You can already feel the impact on certain markets like oil and sectors like banks. We think the big economic impact will come in terms of an improvement in consumer confidence. If you look back on 2020, from an economic point of view, COVID drove a wedge between consumer confidence and other confidence measures. We think a vaccine should start to close that gap beginning early next year. Thirdly, while near-term inflation risks remain benign, we think the medium-run risks are still tilted significantly to the upside. The new fiscal policy paradigm is more inflationary than the monetary paradigm used after the 2008 crisis. We also think the foundations for higher inflation were already in place before COVID, and the crisis has only accelerated that trends. Investors do see some upside in inflation, judging from our investor survey, but inflation markets don't really reflect this. Fourthly, COVID differentiation has been a big driver for currency trends in 2020. We think that continues in 2021. We've spoken about it many times, and we think Asian currencies were clearly the biggest benefactor this year. We expect that to continue into early 2021, although I would say we worry a little bit that China's credit cycle is probably very close to a peak. That's not really a story for the early part of 2021, but will start to become one in the second half of the year. Near term, the main COVID story is a growth rotation. Europe is starting to look better as its COVID case trends start to improve. The US is looking more problematic. We think this should be a key theme for markets into early 2021. Fifthly, Brexit is coming at the end of this year, one way or another. We still put a probability of a deal at 75%, and it could well be that we learn the outcome this week. We'd expect UK markets to rally on a deal announcement, but we do worry the combination of both Brexit and COVID scarring will hamper any economic recovery in the UK. Finally, we think next year is the point where ESG finance starts hitting critical mass. Governments are making very big commitments to climate, and they're backing those commitments with huge bond issuance. Central banks and regulators will play large supporting roles. ESG is going to be a very big topic of discussion in 2021. In terms of market views, let me just cover a few things. Firstly, we maintain our steepening bias for euro and dollar curves into 2021. The fiscal policy and supply impact next year will be huge, and we think bond markets are being too complacent around these risks. Germany is where we see the biggest downside for core curves next year. The euro area is set to recover from here. Supply pressures in Europe will be most acute in core markets, especially with the new EU bond issuance coming. And bonds are perhaps the most expensive asset in the world. They're certainly the most expensive fixed income asset. While we do like sterling into early 2021, we don't see scope for a big rally next year. We also think gilts will outperform other bond markets on the back of the weakness in the UK economy. We're bullish inflation markets, as I said before, given our medium-run views on inflation. We think 10-year Europe is probably the cheapest market right now. We expect US dollar weakness to continue next year. And in terms of euro dollar, we target 125 in early 2021, given the growth rotation between Europe and the US. 2021 should be a better year for emerging market assets, emerging market currencies especially. The global growth backdrop is much improved for EM heading into next year. G10 policy will remain very easy, and many emerging market countries have strong foundations for domestic-led growth heading into 2021. Finally, in European periphery bond markets, we think the bulk of the rally probably happened in 2020, but we do see more upside, and we think Italy is perhaps the most attractive peripheral bond in 2021. I hope you enjoyed this episode of the Weekly Watch, and please do subscribe to our channel to get future episodes. We also encourage you to explore more of our content on our website and social media channels. Speak to you again soon.